And before every storm, there is the calm. Good morning. This is Brian Kuzmar from Commercial Rare Coins and Precious Metals, and a lovely Monday. What's today? Actually, December 14th for our daily update. And what's happened to gold and silver today? Well, we'll discuss that in a minute. Want to go over a couple things with you. The first thing is we are in the calm before the storm. Just like that picture you see there of my live beach cam. It is calm right now. But hey, don't be mistaken. We are in for some stormy times here. I'm going to go over a Jim Rickards article here in just a second before we get to gold prices. But the reason I say this is because everything seems to be okay. The markets are flying. The stock market's flying. I think bonds are doing well. I think so far people aren't in the streets. Unemployment hasn't climbed dramatically, and a lot of other factors. I really believe economically, politically, financially, everything across the board, we are right now the calm before the storm, because I think the shit's going to hit the fan next year, folks. Anyway, let me move along to, it's going to be a quick report today, too. Not a lot to talk about. But I saw this Jim Rickards article here and wanted to discuss this. He discusses everything that we've been talking about for months now. And I kind of like it. It's just kind of like let's just do a quickie on this right here. And I've talked about this so many times. Some of you are probably bored with it. Some of you probably never heard it. So let's just kind of quickly review this. And some of you may have forgotten it. So again, the amount of times I talk about this kind of stuff, I don't think you've forgotten it if you've been listening to me for 6 months. But Jim Rickards does the Daily Reckoning. Jim's kind of a perma-bull in my book. He's been saying for years, even though markets weren't really up that much. But perhaps he's right. I think we've been in a long-term bull market, and bull markets don't always look like you think they do. I believe we've been in a gold bull market and a silver bull market since 2016, 17, thereabouts. Anyway, let me move along to Jim's article right here. He said gold had a nice run up last week. It absolutely did. It traded from $17.69 per ounce on Monday to $18.42, and it's backed off a little bit, but that's okay. By December 4th, 4.1% gain. But he does. I was going to say, why would he talk about the run up and not talk about the run down? So, and he does. He talks gold trading about the same level today. Still, this mini rally has to be put in context of the steep tumble that preceded it. And remember, when I told you that was monkey hammering along with dollar strength and some other things. Only temporary, only temporary. So Jim says, from an interim peak of $19.51 per ounce on November 6th, gold fell to $17.69 per ounce on November 30th, almost towards the end of the month, at a 9.3% decline in just 3 weeks. If you remember, in October, I was telling you October and November is really usually a tough time for precious metals. They usually get the crap kicked out of them. It happened November this year. So I was kind of expecting this, and as I've been saying, buy the dips, buy the dips. This is only temporary. This quick decline was the latest leg down in intermediate term fall from $2,063 per ounce from the all-time high. Gold fell 14.3% in 3 months. Again, as I've been saying for months and months and months, a buying opportunity. When we see these dips that are dollar related and monkey hammered related, and we don't see an economy that's going to get stronger, and we don't see any situation that looks better for our future, gold's going to continue to climb. We are in a bull market. We have been, and we will continue to be. As I said, when you see these little declines, buy the dip. But he does bring up something kind of interesting that I kind of completely didn't really think about, because if you don't listen to Jim Rickards, you don't listen to me and other folks. The decline since August and recent November downdraft have gold investors on edge, and this is true. Some people that I know that have gold positions and silver positions really kind of got panicky this last month, and I seen them come in to start to sell. But after talking to them and explaining exactly what we've been talking about for months and months and months, they held on. They held on to their positions. And they said, you know what, you're right. You're absolutely right, Brian. This is not the time to sell. And in fact, I was trying to convince them to buy stuff. And a couple customers I have convinced to buy more. Buy the dips when you can. Again, this market is far from over. And Jim says that right here. Is the bull market over? Is gold on its way down to $1,200, $1,400 per ounce that it held from early 2016 to 2019? Well, I don't believe that, and I don't think anyone really believes that. Could we see a big downturn in gold, 1400 or something like that? I think so. I saw it in 2008, but it's only really quick and temporary. In 2008, I think gold, gosh, what was gold at the time? I want to say gold was around $1,200 or something like that. And when the financial collapse hit, commodity markets, COMEX, New York COMEX, which is just paper, it's not real gold. People had sold off their gold to cover margin calls, to cover this and that. And it drove gold down to about $800, I think. So a substantial decline, about $400. Problem was is you couldn't find real gold and silver. You couldn't find gold bars. You couldn't find silver bars. Delivery was, a month, 2 months out, and there were huge premiums, even bigger than we saw this last year, the premiums in 2008. But gold and silver and platinum quickly shot back up thereafter. So anyway, Jim did make a good point here. The decline since August and recent November down to have gold investors on edge. I didn't really realize that. I assume that everyone's listening to me, which is not really happening. One of my really good friends was about to sell their entire gold position. Again, I had to talk him out. I said, no, we're not going back to that level. And if we do see that level, it'll be temporary. And you buy that dip if you have the opportunity. Let's kind of move along here. But there's something I really never thought about before. The short answer, as Jim says here, and again, this is something we've been talking about for months and months and months, the bull market is not over. Gold is not on its way back to $1,400, and gold is now poised to break out to the upside and resume its push to $2,000 per ounce and higher. I believe that, except the timing is real important here. I'm not sure we're going to see it by the end of this year, but I'm pretty damn certain next year we're going to see us bust new highs. We're going to go above our past highs of $2,000 per ounce. I think that's going to be a no-brainer, and silver is going to do as well, if not better, I think, percentage-wise. A couple little things here. Let's move on to the first and foremost powerful factor is the rise in interest rates, and this is true. However, but look, interest rates are near zero. The cost of living, if you're putting away treasuries and stuff like that, look, maturing on a 10-year treasury note bottom at 0.508, less than 0.5%, man. You're telling me that the cost of living and the decline of the dollar is much greater than that. You're not even you're losing money if you put your money in treasuries. However, there's that perception that there's some kind of gain. I'm making something. At least I'm making something, and it's got some certainty behind it. It's got security because it's treasury. But 0.5%? Really? That's just awful. You're not keeping up with nothing, my friends. Nothing. Crap, you'd probably be better off cash and to go into flea markets and buying and selling stuffed animals than putting it in treasuries at 0.5%. But again, I guess people just look at an idea of some kind of return as being good. And there's this false illusion that gold has no returns, which is not true. Gold has great returns in times like this. Anyways, as late, I'm not going to go into treasury yields and all that. And again, I recommend you read Jim Rickard's article. He's a pretty smart guy. The second rate is the election. Again, we've been talking about this for some time. The election uncertainty has a big factor in gold. The third factor is the approval of several COVID vaccines and new therapeutics. I don't believe that. I don't think that. I think that the vaccines, it's not going to help put 20 million plus people back to work. It's not, because you know why? Because they killed 20 million businesses, small businesses that these people worked at, and they're never coming back. These small businesses are never coming back. And who do you think they hired? So yeah, maybe 20 million burger flipping jobs or delivery for, or driving people in Uber or doing something like that, because the government sure took good care of the big corporations on this virus while they screwed the small business people. That's my opinion. And again, I don't see, I think that the vaccine will help somewhat. However, the death rate on this thing is marginal at best. And, what's the vaccine going to do? Save a couple more people? It's not going to have a major impact on the economy. That's my feeling. I think we're in for awful times. I think the way they shut everything down was the worst way to do it, and created bigger problems. And let's not forget, we were in serious financial problems before the COVID virus. The banks had major issues. The banks had big issues, and things were going down pretty fast. So we had issues, major economic issues before the virus. Those haven't gone away at all. So do you really think that just because we have a vaccination for the virus that the prior problems are going to go away? No way, Jose. Sorry, not going to work that way. Anyways, I'm going to get through this real quick. Right now, my models are telling me that the dollar price of gold is heading significantly higher. I don't know what models he uses. You know, again, I'm not a big fan of graph people that use the graphs to predict the future, because I think, you know, it's nice to know where you've been, and sometimes knowing where you've been might tell you where you're going, but they're wrong just as many times. I think using your gut feeling and that kind of thing works better sometimes. Even my coin works better sometimes. My coin, as you can hear, but we're not going to flip it right now. Let's move down here. What jumps out of the data is that every spike in rate was followed by a collapse, spot, blah, blah, blah. Kind of interesting little blurb mix here. A Biden victory with Senate control pulls the rug out from under the gridlock scenario, opens the door to the next Green Deal and more payments to people to keep them from riding on the streets, you know, because they have no jobs and they have no money. And without any money, they won't have a home. So the government, Joe Biden's government, is probably going to pull out all the stops, print as much money as they possibly can, and keep people at least from riding or just going nuts, or homeless, I should say. So anyway, but what does that do for gold and silver? Well, you know, the printing presses are going to keep going. Goldman or somebody a month or two ago, they predicted a 20% decline in the value of the U.S. dollar next year. That's huge for us. And you know what? I can see it completely. My eyes are wide open. I can see it clearly. This is going to happen. He points out something here that's depressing too, and it is depression. We're in a new Great Depression. We just don't see it yet. That's the problem. That's what I see. We are in a depression right now. The fact is 20+ million people out of work. All these small businesses closed down. Once the free government money runs out, what is there? More government money? That being the case, they're going to just murder the dollar, the fiat currency, and it was never going to last long anyway. But under a Biden administration, it's going to be accelerated, and that's what I've been saying for months and months and months. Trump was no fiscal conservative at all. He signed a $2.1 trillion money printing thing just to keep people employed and to keep them in office. And the Democrats will do the same thing for the next 4 years. They will kill the dollar even worse than Trump did. That's my opinion. Let's move along here. Finally, momentum, blah, blah, blah. Anyways, hey, I'm not going to read the whole article. I always say that. But it's authored by James Rickards via the Daily Reckoning. Rickards, gold is ready to rumble. I agree 100% with you, James. Let's take a look at prices here. I'm going to update this. I think the coin said it was going to be up, and I said, well, hell, I didn't know. I'm going to go with the coin, and basically gold is down a little bit, 11.95. So the coin was wrong, and me following the coin was wrong too. So it just goes to show you, probably as good as a graph. Anyways, I said anyways. I've been cutting down my anyways for those who asked me to. Let's take a look at precious metal prices right here, gold, silver, and platinum. There's something very strange here. Did you notice the decline in the price of gold right here, down 11.95, but silver is up 14 cents with that. Oh, what's up with that? That is a bit odd. Kind of telling me that I think that we've kind of seen the bottom here. I don't think silver is willing to go much lower than that $23 range again. Who knows, though? We got the holiday season coming up, and they always like to monkey hammer it during the holiday season. However, gold down a couple bucks, but still in that 18, I'm going to say 1830, even though it's a little bit below that 1830, 1850 range, where I think we're going to stay the rest of the month. Platinum up a couple bucks too, so both of the white metals are up 24.11 and 1017. So this is kind of an interesting diversion here, not a diversion, but an interesting separation of gold from silver, which is very interesting because silver usually always follows gold. So I'm not quite sure what's going on out there. Maybe a large position of silver was purchased or something. I'm not quite sure. Platinum, again, separated from gold prices a week or so ago, 2 weeks ago, when it shot well up above $1,000 and went up when gold was going down. So it looks like platinum as well is separating a little bit from gold, and these are just temporary. You don't see this happen very often. At least with silver, you don't. Platinum, oddly enough, I've seen it for the last 2 weeks, and it's been pretty consistently not following gold. So my guess tomorrow is we're going to see more about the same, maybe down a little bit. Maybe I think we're going to see 1825, 1850 range, or 1830, 1850 range, right in that. Not quite sure what's going to happen to silver tomorrow. I'm kind of curious. But again, this month I think what we're seeing is the calm before the storm. Everything's going to be kind of quiet with precious metals. After the new year, I think things are going to be explosive. Well, this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call us anytime at 954-493-8811 for live quotes on all types of precious metals. Don't forget, we also do rare coins, jewelry, artwork, antiques, silver, and watches, and other things too. Meanwhile, any questions on precious metals, don't hesitate to call us between 10 and 4. Mondays through Fridays. We've been in the same location since 1995, and I've been doing this since 1977. Hey, thanks for watching. Let's see what happens tomorrow, or let's see what happens today. If anything crazy happens, I'll come back and do another report. If not, I'll talk to you tomorrow. Have yourself a great day, and again, thanks for watching. Talk to you soon.